Joining me now, Jordan Trimble, President and CEO at Skyharbour Resources. Let's keep this conversation going, shall we, sir?
Let's do it.
Let's do it. And let's look big picture. Big symbolic move in the nuclear sector. Constellation Energy, Microsoft, they're going to restart Unit 1 at 3 Mile Island in Pennsylvania, not Unit 2 where they had the accident in 1979. I was interested to know that Unit 1 was producing power right through to 2019. Which many people may not know. So, just in terms of the significance for the sector and the symbolism of that, what do you make of that?
Well, yeah, I mean, start off with the obvious one. I mean, I don't think anyone 2 years ago in the industry or elsewhere thought that 3 Mile Island would be restarted at any point. So. It's a big move, a momentous move, bringing back on. The one power plant in the United States nuclear power facility that did have an incident. I think that speaks volumes. Obviously, there's a refurbishment of the plant, a $1.6 billion refurbishment that Microsoft is going to fund, bring it up. Obviously, that'll address various potential safety issues. It's an older reactor, right? So you need to refurbish it. But the other big part of this transaction is just the power purchase component of it. You've got a power purchase agreement that Microsoft has now signed with Constellation over a 20-year period. So they're going to be funding this right through Constellation, through the power from the plant will power the AI data centers that Microsoft needs baseload, emissions-free, 24/7 clean electricity for. So it's a big moment. It just shows these hyperscalers coming into this industry, into the nuclear industry, recognizing the benefits of nuclear power. Again, it's the only solution for needing baseload, emissions-free, scalable, reliable, affordable electricity generation. So it's the perfect match for these big energy-intensive data centers, in particular the AI data centers. So that was a big announcement just a few weeks ago, but even more recently, in the last few days, we've seen Google announce an agreement with a advanced nuclear tech company called Kairos. They're developing a small modular reactor, and Google's just announced a deal with them to basically fund the rollout of 500 megawatts of electricity generation across several units or several of these SMRs. And again, this will be powering some of the data centers for Google over the next 10 to 15 years. So, we're seeing these big tech companies, these hyperscalers come in and sign these big, in some cases, multi-billion-dollar agreements with these nuclear companies. And obviously, the market is very excited by this. We're seeing a nice rally here in the uranium stocks and in the nuclear companies and utilities. So it's a great time. It's also in the middle of what is historically a very strong season for the sector as we finish up the year. Usually September through December, or even into January, is a very strong period for uranium equities. So we're very excited for the prospects of Skyharbour, as we're extremely well positioned to take advantage of this rising tide and this uranium price that I think is poised to continue moving higher.
Right, really interesting trend with big tech coming in like this, and again, the symbolism and attitudes changing for sure. Now, you gave a presentation the other day, and in it you said global demand for electricity is going to increase by about 50% through 2040, and that the compound annual growth rate for uranium demand will be about 3.6% through that time. So you've talked about a looming supply shortfall. Mm-hmm. And is it fully understood in the nuclear and uranium sector, or not just yet?
I think it's not fully understood, but it's certainly becoming better understood, and hence why we're seeing this this market over the last several years, in a general uptrend, right? The general investing public, the generalists out there are starting to catch on to this. The thesis that's really driving this space, and the supply-demand fundamentals. As talked about at length previously, you have a major structural supply deficit that's formed over the last 5 or 6 years to the tune of, on the low end, maybe 30, 35 million pounds, upwards of 50 million pounds of a primary mine supply deficit. So, 200 million pounds of, call it annual demand expected in 2025, and, annual production, global mine supply, probably comes in around 150 to 155 million pounds. And so we've always had an abundance of secondary supply in this market to fill that gap. And that's one of the key features and differences right now with this cycle. We do not have that abundance of secondary supply, whether it be from the downblending of weapons, whether it be above ground inventories. There's a number of secondary supply sources that's basically sustained that supply gap, but we're running out of that. In particular, mobile secondary supplies or inventories have diminished quite significantly. And so utilities right now, and this has been talked about a lot, are in a bit of a tricky position, especially in the West, given that there's the East versus West market bifurcation. We're seeing a lot of the Eastern production from Kazakhstan and parts of Africa earmarked for China or for Russia, India, other parts in the East. And so Western supply demand is even more tenuous. We're seeing a major imbalance in particular with Western production, i.e. from the Athabasca Basin, the United States, and a little bit from Australia. That production, that mine supply is relatively small. So we're going to need to see more production come on in northern Saskatchewan, in the U.S., in Australia. Western demand is, and gets back to the first question, Western demand was somewhat stagnant up until recently, but now we're starting to see a more robust demand profile in the West as we're seeing restarts, whether it's 3 Mile Island or Palisades. We're seeing the advent of small modular reactors, SMRs, that'll be coming on, and we've seen a major reversal in energy policy in a lot of Western nations. So it's an interesting time. Utilities are going to have to come back to the market. They're going to have to start contracting. It's been a relatively quiet year with long-term contracting, but that can change quite quickly. A couple large RFPs come into the market, or bigger utilities come in with size, and you can see a lot of millions of pounds of contracting happen relatively quickly. And I think we will see that. And typically that is a good proxy for where the market's going. When you see the long-term contracting volumes ramp up, as we saw in the mid-2000s and in 2010 and 2011, usually that correlates well with a rising uranium price.
Now, on the corporate front, Jordan, a big announcement that you made. You hired a gentleman, Serdar Donmez, VP of Exploration. He worked for nearly 20 years at Denison's Wheeler River, and you've said that that's adjacent and proximal to Moore Lake, Russell Lake. So why is this such a huge addition in terms of the knowledge that he brings to the table? Yeah,
look, Serdar's a very well-respected geologist, geoscientist. He's been working in the basin for almost 2 decades, primarily at Denison. He spent 17 years at Denison. And really it's a perfect match, right? So Serdar at Denison, he was there when they discovered Phoenix and Griffin. He was there right through the discovery process as they delineated the resources there. And ultimately he saw basically the whole process right up to the feasibility study in 2023. He left Denison, he worked at 92 Energy, and then more recently at ATHA, left ATHA, and he's joined us just in the last few weeks here as our VP Exploration. And the key there is that he spent most of his time working at Wheeler with Denison. So Wheeler River, if you look at it on a map, it's adjacent to our Russell Lake project and proximal to our other co-flagship Moore Lake project. Russell and Moore Lake, big block of ground that we now are advancing through a lot of drilling, but collectively those two projects represent over 100 or just under 110,000 hectares of prime real estate just south of the McArthur River mine, northeast of the Key Lake Mill. The haulage road runs right up through Russell Lake. There's power lines there. There's an exploration camp that Rio Tinto had refurbished at the project about 10 years ago at Russell Lake. And then again, just to the west, and we basically encircle Wheeler River to the north, to the east of Wheeler, and to the south. So it's a lot of the same geology, a lot of the same rocks, target types, that trend from Wheeler River onto Russell. So again, Sardar, he knows that project very, very well. He's the perfect fit for us to come in and help us advance Russell. We were coming off of a new discovery earlier this year. It's still very early on. It was one drill hole with up to 3% over a half a meter, but it was a new target that hadn't been historically drilled, and we believe we're on to something much larger there. So I think Sardar is certainly will play an integral role in continuing to advance Russell Lake as well as Moore Lake, just to the east. And so a big addition. Very thrilled to have him join us, and I think in the next several months he's going to deliver what we're looking to do, which is deliver a big, high-grade, meaningful discovery at Russell, and then continue advancing Moore Lake and building out a resource there.
And you've said that you're fully funded for your exploration, your drilling, and you've got a lot of catalysts. You're catalyst-rich at Skyharbour Resources. So give us a few of those for the rest of the year and into 25.
Yeah, so we've got the 7,000 to 8,000 meter fall drill program that's just started. That'll take us right through into the end of the year, fully funded and permitted for that. About a third of that will be at Moore Lake, and 2/3 of that at Russell. Again, having Sardar come on at this time, it's the timing is perfect given that we've just started that program. We had completed 8,000 meters earlier this year. Again, we had a one hole at Russell that was a notable high-grade intercept and a new target. So again, we think we're in the early days of a new discovery there. And then at Moore Lake, it's again continuing to build out a high-grade resource at the Maverick, several zones, high-grade zones at the Maverick corridor. But we also have our prospect generator business. So we've got now a handful of partner companies that'll be drilling or carrying out exploration programs at various other properties in our portfolio. We just announced our 8th option partner in EuraX coming in at our South Dufferin and Bolt project. So these 8 partner companies, likely 5, maybe 6 or 7 of them will be either drilling or carrying out large exploration programs in the next 6 months. So that's a lot of news flow, not just from Moore and Russell, where we're actively drilling and advancing those projects, but also from the half a dozen or so active partner companies.
Lastly, Jordan, let's do a hypothetical, shall we? You've got 29 projects at Skyharbour Resources with some big-name shareholders, Denison, Orano, Rio Tinto. So if one of those companies, hypothetically, either tomorrow or a few years down the road, they say, you know what, we like what they have, we want to buy them, would they be looking at the flagships? Would they be looking at the whole kit and caboodle, all the properties? Hard to say. And would you have an ultimate vision for that?
Well, ultimately, yes, we are looking for, an exit, a sale of the company. That's what we're building Skyharbour up for. And, as the market improves and, as we continue advancing and value adding the projects, I think that becomes more and more realistic. But, look, there's a number of companies that could be suitors, right? We've seen in the last several years the M&A really ramp up in the Athabasca Basin. Most recently, Paladin with Fission, but we've seen UEC make moves into the basin. A number of other companies transact. So we're one of just a couple now, pure play, advanced stage exploration companies in the Athabasca Basin in that $50 million to $500 million market cap and valuation range. So I think we're in a good position to transact at some point. In terms of what that looks like, we'll see, right? We're open for business. I think we're in a good position, again, as I highlighted, with all the work we're doing at our projects, where we're at in particular at Russell and at Moore Lake, but also the partner companies. And, look, we've got a portfolio that, took us a decade to build, with 29 projects, over 1.4 million acres. I mean, it would be nearly impossible to replicate that kind of project portfolio starting now. It certainly would be very, very costly if you could even get your hands on these projects. So, we are in, I think, a unique position, and absolutely, when the time's right, the price is right, we would look to transact.
Great stuff. Always really good, Jordan. Thank you.
Thank you.
Jordan Trimble, President and CEO at Skyharbour Resources.